What is up, everybody? Hunter here, and we have another great interview and conversation, this time with the founder, or one of the founders of Gondi.xyz. I am a investor of Gondi, full disclosure, so this is a conversation as somebody who does have some bag bias. However, as I explain, I do try to come into these conversations as unbiased as possible. I truly do love this company, and I do think that is addressing a big area within the world of assets, digital assets, which is getting extractable value. You'll definitely hear that word a few times here. We talk about how the different areas of NFTs have expanded over time to being able to get that value out, and how Gandhi is planning to address getting more liquidity to these NFTs, as well as getting more collections and loaners into the space. I really do think that it is an area that might have a little bit of skepticism against it from outside participants in the traditional finance and Web2 world. However, do see it only growing as this has kind of been proven out to be a safe and secure way of doing it. Yeah, sit back, enjoy. Thank you to our sponsors who are Futureproof and Gandhi, as well as thank you to you, the viewers, who take the time to watch these and listen to these. It does mean a lot to see when there's even a couple of streams on these, and it does mean a lot when I see the chat. So thank you. We'll catch you on the next one, but for now, enjoy this conversation. So Gondi.xyz, first off and foremost, is a portfolio company of mine. And while I love having portfolio companies and talking my bag, hopefully it's understood that I have there is a little bias here, but at the same time, like I try to basically hold every company that I talk to and I'm involved with to the highest level of scrutiny, right? Because I want the best product, I want the best out of them. Um, you guys, I love. I love the product. I've spent a ton of time. We had a very long discussion in Miami at Pura Vida, discussing what the future of Gandhi looks like and how you guys are approaching NFT lending and loans. I think first and foremost, though, can you just jump into like what is Gandhi at its core? What are you guys doing? Where did it start? And where are you guys today?
Yeah, absolutely. I guess like first, thank you for the kind words.
Of course.
Yeah, had a blast in Miami. It was great. Great to chat in person. And as for Gandhi, I guess like the one liner is we are the most capital efficient peer-to-peer NFT lending protocol. I guess for those who are not familiar with Gandhi or just like NFT lending in general, the way that it works is that someone would be looking for liquidity against any of their NFTs, and again, like they can do against like a bundle, and there are like a few like caveats around that as well. But overall, the way that it would work is that they would get offers from different lenders, and if they choose to accept one of them, then the principal would be transferred from the lender to the borrower. The NFT would be held in escrow by the Gandhi contract, and then the way the loan progresses is that it would have a duration and APR and a principal. If the borrower chooses not to repay back the loan in time, then the lender would basically take possession of the collateral. That's the super quick overview, and then we can like jump into like some of the special cases like refinancing, which was something that we came up with when we launched, or what happens when there are like multiple lenders with like multiple tranches and whatnot. But just wanted to give a quick overview.
Yeah, no, I mean, I think that kind of sums up, like, that's a good overview for most people who I think there's actually a decent amount of people that don't even know that NFTs that they own have extractable value without actually losing the asset, but they can take out loans against them. Examples being Pudgy Penguins are one of your largest, Doodles, Punks. I mean, you guys are the number one lender against Punks. You're actually the second largest holder of Punks, or third behind Flamingo?
We are actually second now,
Second.
only only behind Yuga.
I
Uh,
mean, that's a crazy stat. Also speaks to how trusted and like ironclad you guys are from like a security operations standpoint. Like that's a lot of punks.
Yeah, I mean, we definitely take security very, very seriously. and that was a priority since I guess like launching our like first contract, which was about a year and a half ago. I mean, we decided to go with the best auditors, make sure that it was like, battle tested, and I think that led us to um, not convince, but basically like generate enough trust in some of these holders to take loans against our like valuable assets using Gondi.
I mean, very valuable. You guys have how much outstanding debt do you guys have right now?
So it varies a little bit depending, I guess, like on the price of ETH, but let's call it somewhere between 45 and 50 mil at the moment. And there's around, I guess, like close to 100 mil in assets that are held in escrow by the contract right now, basically securing this debt. So yeah, it's a very, very, very meaningful amount of capital.
Yeah, that's not a joke. Like that's serious numbers. Most protocols don't have that level of like, I guess, trust to like have. I mean, that's a lot of trust from like these people, and these aren't like, it's not like, oh, it's 100 million across, a million assets, that are our average cost of $100. Not that might change things, but like it's you guys are dealing with like multi-$100,000 loans. You're dealing at like the top end of lending. Um, I mean, I think your average loan is like probably what, like 150,000 maybe right now?
I don't have that number top of mind, but it sounds about right.
Yeah.
I mean, some of the top assets that we have. I mean, like if we go to like the case of Punks, so I mean, Seed Phrase, who has been like an early user of the platform, pretty much since like the very early days. Now he's also an advisor and investor as well. He has among like many, he has like he's like Berglyph. It's in an outstanding loan for 500K. Well, his iconic 7 Trade Punk is in a loan as well, which is the largest on the platform at 2.75 million. And then he also has like a bunch of other assets with us. But I mean, that's just like one example. There's also G-Money's Ape. There's a zombie punk as well, multiple Lost Robbies, and X copies and whatnot. I mean, I mean, the list like at this point is like pretty long.
Yeah, I mean, even just before we hopped on the call, like an hour ago, I'll pull it up here. You guys just did a $300,000 USDC loan, 90-day duration, 19% APR, $750 USDC origination fee. These are, for most people to hopefully understand this, like these are very, very competitive, like, they're interesting rates, right? Like 19% is nothing to like joke about. Traditional finance, people are probably going to start taking recognition to this. Do you see like where do you see the like like who is like your average like entrant into Gandhi? Is it the crypto native? Are you starting to see these people that have large excess of stables, or they have money in bonds, they want more yield? Like what's your typical demographic right now?
Yeah, I would say that it's still mainly crypto natives and people that have at least some familiarity with NFTs. Ultimately, that's the asset that they are underwriting. This has changed a little bit, I would say, like over the like past few months. A few people that were just like that have been in crypto for a while, but not necessarily are NFT owners. They saw that there are like very meaningful yields to be generated. I guess within this like vertical within the crypto space, and they decided to start like dipping their toes. But I would say like the stereotypical lender is here someone who is a large NFT owner or an NFT owner in general. They also have some like idle capital, and they're basically in a unique position to underwrite some of these assets. And as you mentioned, these are very good yields as well.
Yeah. Yeah, I mean, there's certainly ones that for people that I know of who are not even in the crypto space, you tell them this and they're like, "Well, that sounds too good to be true almost." It also kind of brings up like two other questions, right? Like these are at the higher end. Are you guys seeing or going to be like addressing ways to like, hey, I want to get 90% yield, but I only have an NFT that's worth 5,000, or I only have $5,000 in stables that I want to get some yield on. Are you guys bringing in more collections? Are people becoming more aware of lending? Um, that's like one side of it. Let's deal with that first. Um, Like how are you guys approaching like the lower end or looking at the lower end?
Yeah, absolutely. So like I guess like early on we decided to focus, I would say, on let's call them like grails, or at least like NFTs that were like very high value. And that bucket would include punks, autoglyphs, let's call it like TRS, art blocks, and whatnot. And the main idea there was like, I would say more of like, hey, we are launching, we need to build liquidity around some given collections, and to make sure that everyone that comes to the market has a counterparty to interact with. And that was the decision for focusing on that early on. And also, like we thought that hey, if we bring these to the platform, like these like very high value NFTs, then it'll be easier then to add the longer tail, like the lower value ones. And over the past few months, actually, we have focused on expanding, I would say, like horizontally, which meant like onboarding some new lenders who are comfortable underwriting these other collections, as well as like reaching out to these like NFT owners. And again, like I don't want to like treat them as like lower NFTs. They're just like, I mean, some people they really like these like other collections, and we treat them just as seriously as like the more like high value ones. But yeah, I mean, it was something that like over the past few months we started like focusing on as well. And you like if you go to the platform now, you will see some loans that are, I would say, from like a few $100 to like a few $1,000s as well.
Yeah, no, I was just pulling up to see like who on like again the lower end. Like you guys do have little pudgies. You have I think 8 active ETH offers on those. Beans, you have Rec Guy, you have Terraforms, you have checks. I mean, there are things at the lower level that do have active like offers already. And then of course, like if it's a supported collection, you can come in and um request a loan against your collection. Um, oh wait, this is a good question actually. I love this. This is why I love doing these live. So Haim has a great question. What happens if an NFT loaner loans against their NFT for a loan higher than floor price? Then they disregard the asset. How do you mitigate overpaying? I'll let you address this, but uh, it's
So
a good question from someone where you're getting familiar with the lending and loan space.
yeah, so I guess I get like a few points here. So, and I want to make sure that I understand the question correctly. So it doesn't really matter whether it's a floor or a non-floor. Again, like all loans are peer-to-peer. So it's up to the lender how they underwrite it. And that's why we have anywhere from like, let's call them like floor punks to like the 7 trade, which would be like on the very other end of the spectrum. And each bucket, let's say, would receive like, of course, like a very different amount of principal. Now, to the second point of like what happens if someone disregards an asset, and I assume that what he means by that is that he defaults and it's in the money. So
Yep.
basically, an asset, let's say that is worth today 100K, has an outstanding debt of 50K, but still the borrower defaults. That in that case, it's just like, let's call like a win for the lender in the sense that they get to keep the collateral, and in that case, it will make a pretty meaningful profit. Uh, Having said that, we've seen in a few cases lenders basically reaching out to borrowers and then like settling a deal in which they allow the borrower to like buy back the asset, but that's not guaranteed. And there are lenders actually that choose to remain anonymous and let's call them like unreachable for these reasons. I would say that at the end of the day, borrowers and lenders, I mean, like ultimately the underwriting is against the asset, and that's all that matters. And then the lender would not be unhappy, or like they would probably be unhappy, but it wouldn't be unfair for a borrower to default on an asset that is underwater, just as it wouldn't be, let's say, unfair for a lender to keep an asset that defaulted and it was above water.
Right. Exactly. Now we have seen this happen before, on the idea of like being underwater and people just letting their like without going back and paying their loans. The number one that I have in my memory is during the bear market, we saw the price of squiggles dramatically uh encounter sell pressure. I know Squiggles DAO really stepped up and was buying and, looking for ways to acquire more, which is amazing. But it does kind of rate like the risk here is that the floor price of your asset does decrease dramatically if you are the one who's lent this money out. That's the risk case, correct?
Yeah, that's correct. And lenders are aware of it. And again, sure, like a 20% or like a 25% APR seems great. But yeah, like what we're just like talking about is the other side of that coin. I mean, what's the risk that a lender is basically taking when underwriting these loans? And because of these, also what we see is that like the longer the loan, the lower the LTV, or like I guess in other words, the principal that they would give, since like of course you would be exposed to much higher volatility if you're underwriting a 1-year loan versus a 30-day loan. It would like another way. I mean, like for those who have like traded options, these would be like similar to like selling a put option,
Right.
basically. Yeah.
Exactly. Now, two people that have spoken obviously highly of Gandhi because of their involvement, but also are very active on the lending and borrowing side. G Money made the comment, it is safer to borrow against a punk than a house. That is a crazy statement, but I think there's validity to it. And then Quick Rider, a close friend of mine, making some comments around if you're going to, he feels safe doing these lending, these loans out against punks and squiggles just because of, hey, I'm okay risking this capital because I have a long-term vision, and a long term I know that I'm okay to own one of these assets and hold it because there is no holding cost and I have the ability to. Do you think that's a valid, like, do you think, one, the house one is a kind of a crazy one? Do you think more people are going to start understanding that there is kind of like this safe haven doing loans against these blue chip? And I know, again, that's a weird word, but blue chip NFTs.
Yeah. So I don't know how I would compare it exactly to taking a mortgage or basically issuing a loan against a house. But the reality is that let's take the lender side. If I'm issuing a loan against any of these NFTs, I know that if the borrower defaults, I'm getting an asset where there is, let's say, a global market where if I choose to, I can sell it to, or I can choose to just like keep the asset. Just as many of the lenders that we have are actually like seeing it as like an opportunity to potentially acquire some of these assets. But
Right.
it just like take the lender who's like seeking yield and treating these assets purely from a financial point of view. I think it's much easier for someone to unload an NFT than sell a house in the case of a default. So, I mean, in other words, I mean, like I've been lending for a while, originally in other platforms, and of course, like after launching Gondi, and I'm completely comfortable because I know if I get a default, then I have a market to sell that asset to. Versus if I'm underwriting a loan against a house, let's say in Missouri, I don't know how I would go around basically like the asset and like unloading it, going through all the paperwork. I mean, here everything's handled by a smart contract, the loan, the potential sale. Honestly, it's like pretty unique.
Yeah, that is a good way to looking at it. Do you think that because of that ease of offloading the attractive APRs that one, more people enter the loan and lending space, but do you think that also fuels the floor price of these assets that have been deemed as, safe to loan and lend against, like such as punks and squiggles and autoglyphs?
Yeah, I mean, I think that like these dynamics are constantly evolving, and maybe what's the case today might not be the case in the future. I don't know, just like to take an example, let's take autoglyphs. Autoglyphs only had 5 sales on chain, if I recall correctly, last year.
Mhm.
While in Gandhi, we had, I think, like 48 originations, over 80 refinances, like tens of repayments, like a couple defaults. Uh, every data point there is in some way informing uh, where these assets should be trading. Like, there's not really like a buy and sell transaction, but that's what's going on. So we had like we're seeing these like interesting dynamics in which like first is like, all right, an underwriter who comes into the market, they would see sales data and based on that underwrite an asset. And now it's a bit of a mix. Like you want to see not just like the sales data, but also like the defaults and like the repayments, and basically come up with like, let's say like some like mental model or an actual like model if you're like basically use like taking like a more like quantitative or like it's like rigorous approach that basically considers like all of these data. So I guess like that on the one hand, and on the other, I think it gives some value to the asset. Like if you know that you can get liquidity against your asset, like basically if there is a credit market against an asset class, I think that that values the asset in a different way. And we see that happening in, like with like other markets as well. If you have a stable credit like housing market, and then the price of the houses go up because you know that you can get liquidity against that. You know that that capital that you're like locking in, well, like part of it you can basically access to without having to sell it. So
Right.
like, as the market matures, we'll start like seeing these more and more.
That is true. Now, this market's maturing. The mechanics of the loan and lending market are likely going to mature. Um, you guys have where you guys started with V1 of Gandhi to now on V2 has brought in additional features. Again, you guys started also with luxury grail items. You've started to figure out how to bring in these lower priced collections. Um, can you talk me through what like the evolution of like NFT? Well, I wouldn't even say like let's say call it digital asset loans and lending. What does the future look like? What mechanics should we be looking to seeing? What decentralizes this even more? Can you just give me the pitch?
Yeah, sure. So I guess from like
I'm also like for everybody's watching right now or listening, like I also know like I'm trying not to like say anything, so I'm letting OXN kind of like take the lead here because I don't want to say something I shouldn't say.
it's totally fine. So I guess I mean like purely like from like a capital point of view, over the past years, I mean we're still like if we say like 20%, that of course like a very high APR. But if we compare it to like where things were, let's say I guess like before Gandhi launched, maybe like 2, 3 years ago, APRs were much higher for LTVs that were like much lower. So as
Right.
like more and more capital is like entering the space, the market is becoming more and more competitive. Now, specific to Gandhi and the dynamics that we've seen, and I guess like how it has evolved. So when we launched these things, like we introduced this idea, or like I guess like this feature called instant refinancing, which basically means that if there's an outstanding loan, so let's say that you and I we start a loan, you're the borrower, I'm the lender. Let's say that you take a loan against a punk for some amount of capital, like 20% for a year. If there's another lender that comes into this market a month from now or 2 months from now, and they are like, hey, actually, like they're willing to underwrite this loan at a lower APR, they can refinance it, which basically entails transferring principal plus accrued interest up until that point to the original lender. And from that moment onwards, the borrower starts enjoying a lower APR.
Right.
So in some way, that ends up like driving the market to more efficient, or I guess like lower APRs for borrowers, higher utilization for active lenders, and that's it's like a new equilibria that the market finds. And ultimately, I guess like it's always kind of like a way of like balancing the benefits for like borrowers and lenders. The When we launched V2, one thing that we added was so again like one thing that I didn't mention was that all right, like the original lender now suddenly like found himself with idle capital himself, and
Right.
that's not great. I mean, like if you're basically issuing new loans, taking taking like basically putting the work to underwrite them, you don't want to basically be left like a day after, like like an hour after you started a loan with your capital back because like someone else just like came and basically refinanced you. So there are like two things in which like lenders can protect against that. One is the idea of origination fees. So when you start a loan, that origination fee as a first lender, like you would get that, and regardless if you're refinanced or there's like an early repayment, you would get to keep that. And secondly, there's a lockup from the moment that a loan is refinanced until, from the moment in which like it's either refinanced or originated until it can be refinanced again. So in that way, so let's say that we start a loan right now for like 30 days. For the first like 3 days, that loan cannot be refinanced by anyone else. So in that way, like the first lender has some guaranteed profit.
Protection. Yeah.
Exactly. Yeah. And V3, it starts like incorporating like a few things more, which is what we launched a couple of months ago. One of them was around, so this was more of like an issue that I mean we should have caught in the V2, or like it's like even like in the V1, which was like if someone is renegotiating a loan or like extending a loan, even if they're like the lender of record. So let's say we have a loan, the two of us, for
Right.
like 40 ETH, or like he has like 40 ETH outstanding of debt, and we just want to extend it. The lender would still require to have 40 ETH at that point in time to extend the loan, which it shouldn't be the case. I mean, like if I am already like the lender in this loan, and I just want to extend it, well, like you should be able to, like the borrower should be able to just like pay back the accrued interest up until that point,
Yep.
and the lender shouldn't be required to have any capital. So we address that issue as well, and basically that's where we're right now. How do we see this evolving, like the market itself? So everything has been peer-to-peer right now. And this has happened with other lending markets as well. It's not really like something new within this space. As this market matures, what do we think that's going to happen, or like we're like the way that we're like thinking about like the next like iteration of Gondi and what we're hoping to be launching in the coming months, is that there should be some, like, I don't want to give away too much, but the idea of that capital, like there will be like capital providers, there will be people who like underwrite, and there will be lenders. Sorry, I'm borrowers, of course. But there should be a decoupling of the role of capital provider and underwriter, which today is the same person, right? I mean, like if I'm familiar with these collections and I want to underwrite them, I can only do so with my own capital. Or if I take capital from someone else, that's of course happening off chain through like a fund or like some other entity, but nothing of this is happening, let's say, in like an on-chain economy or contracts. That's something that we'll be addressing and something that hopefully we'll be like launching soon. And the second bit that we're working on is that we've seen that a lot of users basically want to sell the NFT. So like borrowers would like to like sell the NFT that they have in an outstanding loan. And right now they actually need to pay back the loan, and only then they're able to list the asset. While in like any ideal world, they would be able to just like list the NFT while still in a loan. And if there's a sale, well, borrower gets to keep the difference between the sale price and the outstanding debt, and the lender is basically paid back. So that's something that we're working on, and you can think of like a similar scenario in which like someone wants to potentially like buy an NFT using a loan.
Right.
But I'll make a pause.
I mean, of those two areas they've mentioned, I love it because with the introduction of V2 and V3, like you reduce friction points and you made it so that, you know, the digital asset economy, if I wanted to get value out of my punk before you guys existed or before even loans existed, I need to sell it. And that meant giving up the asset, and I might only need to sell the punk for, you know, a week to do a deal, or to, you know, to hey, I see a trade or a mint coming up and I'm going to flip out of them. And then I would go back and repurchase, or I'd have to get a new one. This then opens up that opportunity to extract that value without losing the asset. Then on top of that, you at that point, like you've taken it off the market essentially. You guys are addressing bringing that asset still onto the market while being actively in a loan, which increases the efficiency and the fluidity of the digital asset market. And then on the other side of, you know, you guys have traditionally been peer to peer, a lot of people that want to get into lending, who want to get yield, as we've seen all these other yield areas, there's a lot of capital that just hasn't entered because they see the lending space as a little scary and they don't understand it and they haven't done it before. But you do have experts that are doing this with tens of millions of dollars per month or per annum, and they are, hey, they would be, if they had more capital, they do more loans, and if there's more capital for loans, you bring in more NFTs, and you get this flywheel effect. And I think that when you start to unlock that, especially at these higher end collections, you do start to see floor prices reflect, hey, these are valuable assets from a value extraction and accessibility standpoint. Hopefully that makes sense.
Yeah, absolutely. And I guess like one thing that I would also mention as the difference between like taking out a loan versus like selling is that, I mean, this depends on the jurisdiction where you live, but there are tax implications as well that would play out. I mean, we've seen people who like, I don't know, like maybe like they minted punks. Punks are now worth whatever, like before, like 130K or something like that.
Yep.
So like difference between like borrowing or selling when you need to pay capital gains, that's meaningful. And we've seen some users basically taking this into consideration at the moment of deciding whether to sell or just borrow against some of their assets.
Oh, that's so interesting. I mean, you technically, that's such a great point from a I didn't even think of the tax advantages to having loans and lending. Huh.
Yeah, and this is not something that I would say that is new in the NFT space or in like the crypto space. This is something that people take advantage of in, I would say, like the traditional market, or I'd say like traditional asset
Yeah.
class.
Yeah, no, it's done traditionally. I just, for some reason, that side of things, especially when you know, you are trying to, when, hey, you minted a couple of penguins. All of a sudden, they're worth a couple 100,000. Um,
Yeah.
that's significant. Are you guys? Penguins is a good example. So penguins are asset that right now for the next like what 50 days, they are an asset that has a airdrop attached to them. That's a unique case. And the other one that we just saw happen is a Solana project. Careers Quest just did a token bound NFT. So it's essentially it's essentially like a wallet almost, where it's got the NFT and then it has tokens that can live within that NFT. As you guys start to see advancements and new mechanics enter the ecosystem, are you guys looking at integrating those other chains? How I mean, in a rapidly changing environment, how are you guys handling that?
Yeah. So actually, this is like a feature that I forgot to mention that we added in V2, which is the ability to delegate an NFT that you have in an outstanding loan. So let's say that you own this penguin and you take out a loan against it. Since V2, which basically at this point encompasses 99% of the loans that we have, you're able to delegate that to your hot wallet. Since like once the loan starts, that NFT is like owned actually by Gondi's contract,
Right.
since it's in escrow. But we allow that to be delegated. So any project that is doing airdrops and is compatible with Delegate, owners are able to take advantage of that. And in the
Wow.
future, if we see that these like changes and there are like new dynamics, I mean, ultimately we're like trying to adjust and like pushing like features that reflect the current like the given state of the market. So we'll probably, if these changes, we'll try to adapt to that as well.
Are you guys ever gonna look at other chains? I mean, right now it's only ETH mainnet, correct?
Yeah, that's correct. I mean, I don't have anything against looking at other chains. To be honest, at this point, it's not really like a priority or something that we have pursued. Just because of like where we see that, let's call it like our like the marginal investment from a product point of view
Hmm.
of like going deeper in the Ethereum ecosystem, given the current like NFT space there, versus I don't know, let's say like launching in Solana, which would mean having to code everything for it for the SVM. It's just not there. Like
Right.
adding some of the features that I mentioned, which would be just, I guess, like let's say going like vertical in Ethereum, we see that as more valuable than basically copying our current like, feature set to be live in Solana or like ordinals.
Right. Yeah. I would I understand that from like a ideation of like are the most expensive assets in the NFT world. There was that crazy chart, which I think it's fair. I also think it's hilarious because the idea of like what's a rare NFT is it's just like a funny way of like looking at it. And I know it did rub a few people the wrong way. Uh, but we do really see all these like grail assets existing on ETH. Like they aren't Solana doesn't have this like whole collection of like super big grails that sell for hundreds of thousands of dollars. Ordinals, yes, I get it. You do have expensive assets, you have rare sats, uh, but I don't think it's the same provenance. I don't think it's that same like historic positioning that you have on Ethereum right now.
Yeah, and again, I mean, like this might change in the future. I mean, there's Semblem Vault, which I guess like it allows for some kind of bridging with from like some assets living in the Bitcoin chain to ETH. From a UX point of view, like I know some people are like not very comfortable doing it. But back to your point, yeah, that's the current state of the world. If in the future this changes, and again, like ordinals or like new collections in Solana end up gaining market, or like mine and market share, and they become more valuable and they become like stable assets, then we wouldn't doubt into like in pursuing all of those.
Right.
I guess like ultimately what you need is like an asset that is like valuable enough for people to be willing to underwrite that, and that like the price has like some kind of stability to be able
Right.
to be underwritten. So yeah, well, we're not very religious about it. We just try to expand the market and go where we think that this product is needed.
It makes sense. And I get it. I think there's a lot of projects that spread too thin too quickly or try to be all encompassing. You guys have stuck to the thesis of just being the best at certain things and bringing the top value assets in. It's clearly one. I mean, my thesis, I don't think I've ever said this publicly. My thesis when I invested in Gandhi was whoever wins punks wins lending. Um, and I mean, you guys have clearly won punks. I don't see that ending anytime soon. I see that only accelerating. Um, but I do think that's probably a advantage to you guys, for sure. Outside of punks, obviously you're a punk owner and holder. What collections for loans are the most interesting for you? Do you see like squiggles becoming super hot over the coming years? I know they're down bad a little bit right now. Some people, say that they'll never recover. Do you see them making a comeback?
So I own squirrels as well,
Okay, yeah,
and I do really like that collection as well. It has gone like up and down. I personally, I mean, like when I bought them, and like I found them like it's like aesthetically pleasing. I like how they look. Sorry, I'm not like really like an art connoisseur or like someone who has much knowledge about that.
fair enough, fair enough.
I was lucky enough to like meet with Snow for a couple of times in I guess like real life. He's great. I mean, he's such like a kind human being. So basically, those two things is like what led me to want to own that collection. What happens in the future? I don't know. To be honest, I'm not really good at speculating. I think that they will go up. I think they have historical value. And again, like the community, I mean, there are like different bits. I don't really want to like, or like I can't really like speak to that. But we'll see. It was definitely one of the collections that really, I don't know, like made Gandhi, or like I guess like helped us get where we are today. Like
Yeah,
early on, we had a lot of outstanding loans. This was also feasible because of some like very active users that were like early to Squiggles, and they're like huge fans. So of course, we're like very grateful for those users as well. And but yeah, sorry that I can't really like give an answer.
no,
It's
I
just
get it. I mean, look, those are kind of like on the spot answers, and it's dangerous to speculate. I get that. Um, yeah, I think it's interesting that we see them day in, like month after month. They're in a more like another prestigious institution has taken governance of a squiggle, and somebody else has purchased another one. They definitely have a spot as a historic on-chain asset for sure. Um, and I think that again, that if people want it and that drives a value, then there's a loan market, then the loan market allows more extractable value, which then fuels like it is this like whole idea of like a almost a snowball effect um for these collections when you get that demand and then you can start getting value out of them.
yeah, absolutely. Uh, and so yeah, I mean, like that was like I would say like Punks and Squirrels were probably the biggest two early on, and they continue to be like again like very meaningful pieces within the Gandhi ecosystem. I would say like over the last year, what we saw is a pretty meaningful increase in one on ones, or like either like one on ones or at least like rare pieces. Like I don't know, maybe it's like not a one on one, but it's like a set like part like sets of like 10 or like 25 like X copies that we've seen like
Right.
taking people like taking loans against those. Um,
How does the one of one market differentiate from the collection market, from like a lender loan side of things? Like is it harder to get a loan? Is it harder to price? Like what's the difference?
Yeah, so I mean, at this point, we're fortunate enough that we have I would say like different like pockets of lenders that are willing to underwrite different pockets of the market. And we have people that would never do a one-on-one, but love doing punks, and we have people that are like very happy doing one-on-ones. And I guess like from my point of view, and again, I might be wrong about this, but the like underwriting a punk or like underwriting a squiggle or like I would say like any of the like collections, especially like and especially floors, it's easier to some degree to an outsider, in the sense that you have more data. Like there are more sales. The bid ask spread is tighter, so you can use all these data to like really like underwrite a loan versus if you take, let's say, like a one-on-one, like an X copy one-on-one, or like a Beeple, or like any other, then you really need to know that market very well. And many of these sales actually happen off chain. Some of it ends up being really like a bet on the future of these artists and these like one-of-ones, and not so much in like, hey, like punks today are at like 35 ETH. They've been, and I can see like the price history for the past like few years, and then based on that, I come up with like a little model that underwrites it. For like a one-on-one, it's like very, very different. You shouldn't be like fooling yourself into like thinking that you can like really have like a mathematical model giving you a precise estimate.
Right.
So the underwriting process is quite different.
Way different. It definitely does seem way different. But again, like there where you don't want to sell this asset, it's a one-on-one, you'll never get it back if you let it leave your hands. All of a sudden you have extractable value from it. Which is so cool. I have always like joked like I've been to people's houses and they have, very nice art pieces on the wall and they're worth, half a million, $1 million, and you can go get a loan against that, but the process of getting that loan is, weeks if not months process. Then you have to, there's the physical side of it. Then there's like, hey, how much of the value am I actually getting out of this? What's the rate? Versus a digital asset, which again is fine art. All of a sudden, it's you could have that loan done in an hour or two, as long as the lender's there, and it's instant. And you can go take that capital and use it on chain or withdraw it. And then when you're done, come back and pay it off and get your asset back.
Yeah, I mean, it's exactly like as you described it. I mean, we've seen like some of these loans. I mean, some like take a little bit longer. It depends on like the liquidity at a given point in time. But the I don't know, things like the seven trade punk, like Danny's punk, that loan from the time in which basically seed phrase expressed interest in potentially like basically taking a loan against it,
Right.
and the time that we executed, we were actually, I remember, like we were like actually like bound, like the lender had to like on ramp the capital, so we were actually bound, if you want, by the, let's call it like the traditional finance space, and not so much by like crypto itself or like blockchain itself. Like that like got done in like, honestly, I think it was like a few hours at most.
Oh wow. I mean, this is a historic one too. This is the largest on-chain loan against an NFT, correct?
Yes.
Um it's crazy. What I'll just read off the stats for anybody who's listening, not watching. It's the seven trade punk, owned by Seed Phrase, 180 days, 17% APR, $41,250 origination fee. And the loan is for $2.75 million on Gondi. Uh, insane. The record before that was G Money's at $1 million, his Ape Punk. We've seen a gradual increase. Obviously, there's going to be a larger loan on chain in 2025, as long as everything stays the course. Um, do you think it's going to be another Punk? Do you think it's going to be like where do you think the next big one comes from?
Well, if it's another punk, it would really need to be an alien. Given like this, it's hard to like really price the seven trade. Some people would say that is on par with an alien. Some people, given that it's a one-one, or like it's like a unique punk, would price it above. Some people would say that it's somewhere between an ape and an alien. Uh, Again, like that's there's not. I don't think there's like a consensus around that.
Right.
It also has, of course, like some like brand value as well, given how Danny's has used it in the past. So if it were to be a punk, it would need to be an alien. Outside of that, I mean, there's still like some like pieces that might be of like higher value, some like one-on-ones, maybe some people. Who knows? I mean, we're constantly looking for those and trying to reach out to. I mean, many of these owners, honestly, they're not familiar still with Gondi or in general, just like the NFT lending space. So, or like if there's anyone listening today or like in the future and they have like one of these like very high value assets and they're considering it, we're always happy to help.
I I can't let that go without me any comment. So you guys are one of the most hands-on 24/7 awake dev teams and business development teams I've ever met. Plus some of the best investor update emails that exist. I hold you guys as like the standard of transparency as well as like guidance and where you guys need help. You guys crush it. Um, Again, sorry for like the massive like glaze here, but like you guys do absolutely crush it. The part of this that you guys have specifically done well is you are constantly hitting up your lenders, have capital and saying, "Hey, I know this guy who has a punk. He wants to get a loan. It's a special one. Here's about what he's looking for. Are you interested?" You're constantly doing that. On the lender side, you might have a new lender come in with a ton of capital, and then who has assets who might be like you're constantly doing that. Um, I do you think that at some point, like, do you have to, like, scale the team, or is it, like, just you got like, what how do you handle it? I mean,
Uh,
when we were in Miami, you even said, like, "Hey, we need some time. There's a loan going down right now, and we're, like, figuring things out." You guys are hands-on, boots on the ground all the time.
Yeah, we're not a large team. I mean, it's nine, like 8 full time, including engineers and business development, and like founders as well. It's Berga and I who started originally Gondi, and one guy who, I mean, he's part time, but honestly, he's amazing as well. Like it really seems like he's actually like full time, to be honest, and he's been a fantastic addition to the team as well. Um, I think like we just like care deeply about like making it work. We understand that someone who's again like giving up possession, at least like temporarily, as a borrower, like their assets, we know that's scary. We want to be basically communicating like these like trust or like confidence like as much as we can. Like we want them to feel comfortable, and we know that it's a hard process potentially. At least like the first few loans, and on the lending side, like similarly, we want to make sure that people are comfortable. That it's not like they're like sending capital that they might never like see again, or like there might be like a glitch. And again, like I we do everything in our power to make sure that there are like no like security like bugs or like exploits or like security issues. Hopefully, we'll never find ourselves in a position where there is one. I can't guarantee that. I'm not gonna lie. I don't think that it's completely impossible. Again, we do everything in our power. We that includes like audits to how seriously we take our internal process for like pushing new code to basically getting insurance through like a third party as well for the loans. But again, we're aware how like tricky and like, again like stressful these can be. So we want to be there, and by we I mean like the whole team, like available as close to 24/7 as we can. Again, like we also sleep, but first thing that we do in the morning, and I'm here speaking for like everyone else in the team as well. First thing that we do is like check the phone, make sure that nothing has happened at the product level. We see if there has been like any inquiries, and same happens. That's the last thing that we do every day.
Right.
So yeah, I guess it's just like a commitment to like making it work, and the whole team has it. It's not just like Berg and I, like literally like every single member of the team. Again, like I'm incredibly grateful, and everyone's incredibly talented. We're very lucky with Berga to be working with them.
You guys crush it. You guys crush it. From a different angle here, from a founder's perspective, um, what is it like running like and being a founder in the Web3 space? Because it's you're building in public. Everybody sees what you're doing. They see your wins. They see your losses. Um, just walk me through because I think we did touch on this when we talked. Like, what is your background before Gandhi, and then why Gandhi?
Yeah. So I guess before Gandhi, I was running the crypto space, but doing something quite different. I started a high frequency trading firm, mainly focused on trading perpetuals. We were one of the largest firms trading in Binance, Wobi, I guess before that, BitMEX and whatnot. Before that, I worked at a company called Palantir in the machine learning team for a few years. What's different? Well, like Gandhi itself, I mean, we have users. Like when I was like doing like I say high frequency trading, we didn't really have users. Like I mean, we did interact with exchanges given the volume that we had, and with some of our like debt providers, but it was like mainly just like internal capital. So it was very different from that angle. And what led me to start Gandhi was that we thought that the opportunity. I mean, Berg and I, we've known each other for a very long time. We've been close friends since '09, and we've been meaning to work together for a while. And for different reasons, the timing was where the space was like never the right one. Finally, in 2021, end of like late 2021, we converged and we decided to give this a try. I mean, we're both excited about the opportunity here, and we decided to give it a go. Now, how it has been since I guess like that day. Well, I mean, like I'm not gonna lie. I mean, like over the past year, I mean, we always like were very confident in what we were building. We're very confident in the space, especially in the long term prospect of it. But we didn't know, I mean, what was going to happen with NFTs in some way. I mean, like when everything was like pumping, and everything was around meme coins and whatnot, and NFTs were like either lagging or like honestly going down. Uh, it was tricky. I mean, like we never really like stopped like shipping, like reaching out to users. And if you look at like the graphs, like actually like, we've been constantly growing our TVL. But I would be lying if I said that every day was easy. And like when things were, I guess like the market was going sideways, that we were like still. It took like I guess like the extra effort or like that like extra, I guess I don't know, like bit of strength to like keep it going. But it's been great. I mean, like I'm like again like I think like being with a great team definitely like makes it easier. Um, Having like again like being like Berg and I like doing this and working with incredibly talented people who are very committed to making it work. It makes it much easier to push through, let's say, the hard times as well.
Yeah. Yeah, exactly. I mean, you guys have just been so hands-on, the right team. Even when there were bumps in the market, you're still heads down building. This chart that I have pulled up here, which is at dune.com/x3 research slash Gandhi. Um, right now, it's a good dashboard to keep an idea of what the loan market for you guys looks like. Your outstanding originations, right now, $48 million USDC in origination, 31.
Sorry, Hunter, that might be an old one. Sorry to interrupt.
Oh, okay. Well, then never mind. Oh,
Let me
wait, this might actually be an old one.
let me see if I can send a text.
Yeah,
Private chat, maybe
you're
here.
right. Good catch.
If I send you, I just sent a link over like private chat. And like, so it's like slash like Gandhi underscore protocol slash.
Oh, okay.
Let me
Let
see
me
if you.
pull this up. We'll drop it down here. Switch to this tab. All right. We should have the new one now up. I didn't even know there was private chat. Also, that's pretty sweet. Um, okay, yeah, way different, but still 31,000 ETH, uh, which is great. Like, I mean, these are big numbers, and the charts don't lie. Uh, as you can see, they're up and to the right. There's growth there. You can see when, like, right, the market did dip. You do have these laws, but for the most part, the number of people, the volume has continued to grow as you see people adopt into getting yield and being able to pull out a I feel like a broken record. Like that's what this is. Get yield and get extractable value out of an asset you own. And it's not like a crazy concept. It's just we're making it's so efficient, it's frictionless, and it really does all of a sudden for me it's like it's a huge deal. I freak out about it. I know so many other people aren't excited about the like lending and loans market, but for me it's this massive deal that I can have a piece of art on my wall or a PFP, and the second I need money out of it, just pull it out. Um, but yeah, so this one is at dune.com/Gandhi underscore protocol slash NFT dash lending dash market. I'll put the link in the video and whatnot so you can get to this, but um, it's a definitely a dashboard worth keeping up. And I would say that the loan market is a good indicator of what is happening overall within the NFT space and like how people are viewing, I guess, the future of the market for certain collections as well. Is that fair to say?
Yeah, absolutely. I think so.
Yeah, I know. I know when Pudgy Penguins were going to their TGE, the loan floor kept kind of edging up and up, and then it stopped at I think like 17, 18. You might have saw a couple dip higher into the 20s in there in the 30s. But you could kind of tell that where the market was pricing in the airdrop value, and
Yeah.
quite literally down to the exact number. I think it might have dropped like one ETH lower, but the floor when after TGE went to 17 and then it went right back up. But it was a great indicator for how to play that TGE because of how smart money was moving. Um, Again, I think that's valid, a good way to look at it.
Yeah, absolutely. I mean, what we saw is that people were also like underwriting, given that the borrower was still the one who would get access to the airdrop.
Mm,
Uh, the floor price would increase. Let's say, and let's say it went from like 15 to like 25, or like 17 to 25, or something like that. Again, you probably know the numbers better, but the principles themselves, they didn't scale as fast as like lenders knew that there was going to be some adjustment there as well.
right. Yeah, dynamic market. But also you have, I mean, there's the speed at how that's able to react. You never see that in other markets or, Web 2. It would never exist.
Yeah, absolutely. It's pretty wild.
Um I'm so, we spent a ton of time talking specifically Gandhi and you. It's always interesting to talk to participants in the space who are building and have hands-on. Outside of Gandhi, is there anything that has caught your attention that you're interested in that you think is worth, having on your radar? Or are you just like, no, man, if it's not Gandhi, I'm not looking at it. Or I don't find anything else besides Gandhi industry. And
Uh, I wish I had the time to like really look outside of Gandhi.
it's a good
I mean,
answer.
yeah, I mean the issue. I mean, for better or worse, of like building something is that 100% of your energy and time is really focused on that. Uh, so I don't really have a good answer to that. Besides, like now, it really is just Gandhi. Not saying, of course, like not saying that there's like nothing else relevant in the space. There are like plenty of things that are like really cool.
Right.
Uh, but by the time that I see it is when everyone else is already like talking about, and it's really not really like alpha, or like not being like an early user.
Right.
Um, it's basically when like my Twitter just like flooded with something else, and it's like, all right, like, there's something else going on. But apart from that,
Well,
it really is.
hopefully you've seen that we're in an AI meta right now. I can't wait to see the first loan against like an AI agent. That'll come at some point, or an AI asset. Uh, I mean, well, I guess that's a good question. Like right now, you guys are doing traditional generative art and then PFPs, and one of ones, I guess, is on the other side of that, but that's still art. But that for the most part, I don't think you have anything that's outside of those two niches or verticals. Are there any other niches or verticals within the NFT space you think will be like the next one to come in? Gaming, perhaps?
Yeah, I mean, gaming, I guess, it was something that was very promising a few years ago, or I guess like towards like, I guess, like the previous cycle. We haven't seen maybe yet that resurgence. We'll see how that plays out. Uh, Real estate is one that I would say like ever since probably 2017, I've seen like a project like trying to like go after that, getting some traction, and then folding. Um, I think at some point that, I mean, it will take off. The regulatory framework will be there, and a team will crack that and execute it, and like there will surely be a credit market for that, and that's when we will also start basically looking into it. In some way, I mean, again, we are a derivatives market of like we're a credit market, so we really depend on like the underlying asset class. It's not that we've only done generative art or like art and PFPs and whatnot, and nothing else out of some, again, like core belief. It's just that, hey, that's where we see most of the value today. But we do think that there will be new asset classes around like real world assets. Uh,
Right.
Maybe it's
Watches, jewelry, real estate, cars at the high end level. I think, those will all come. And those are, I mean, absorbable within Gandhi for sure.
yeah,
As you
yeah,
guys as you
uh,
guys grow.
yeah. I mean, regarding AI, I haven't been following like that close, or at least I haven't really been following that close the intersection of AI and crypto yet. I've been following pretty close the AI bit and crypto. I don't know still like where like that intersection is. Of
Automate
course,
agents doing automated lending and loans, and when that starts happening, that's that's like actually that's like at the most advanced end of the spectrum, right? Because I would say like handling like liquidity pool, uh add and remove, and trading's kind of like that next step, but lending, on the lending side, that's an even more advanced like understanding of like market direction and LTV and APR. Um, at some point, somebody will do it though, and I'm sure somebody listening now is like messaging somebody, "Okay, we should do a lending agent that just takes in pooled capital and looks for lending deals and automatically does loans."
Yeah, I mean, I think that can happen. Again, like the degree to which that is independent is what's gonna change. Change. I mean, at some point, you have that agent actually running code in a decentralized computing network. So basically, the outcomes of every like of that model is actually provable versus like someone just like running this off chain and like passing it on and
Right.
whatnot. That's when things get really interesting.
Yeah.
Uh,
Well, and that's why TE has become such a like area of like interest, and it's one that I don't fully understand. I've definitely done my research and I do have an understanding of it, but you have to have these secure execution environments to do all these there's high risk, and well, maybe not high risk, but there is risk if there is not um you know security around how that's being handled and basically being trustless.
Yeah, exactly. And that's like a matter of time. Like again, like I don't know if like I haven't been following that space close enough to have an informed estimate or like time estimate. Uh, but at some point it'll happen. And I think that's incredibly interesting.
Well, now somebody's working on it again because that's how the AI agent space works. Somebody here has heard this, and now it's in AI 16Z's Discord, and there's a team of 5 people working on it already. It's probably already halfway done, honestly. That's
Yeah,
just how it's how the agent space is right now.
yeah, it's wild. It's really interesting though. I again still like looking at it from the side, but it's incredibly interesting what's happening there.
Yeah. Um. So I've really enjoyed this chat. I think I've learned a lot. Hopefully, people listening have learned a lot. At this point, as we wrap up here, is there like is there a final pitch to the people that either have capital that are listening and have not done a loan on chain, or somebody who has a punk, an autoglyph, a pudgy, a wreck guy, one of these collections on Gondi? What's your pitch to them right now to jump on and do their first on chain loan?
Yeah, maybe I'm like repeating myself, but if you have some capital idle, I mean, one thing that about like NFT lending, or Gandhi and like other platforms as well, is that it is very clear how like where the yield is coming from. So maybe you find like, oh, I can turn like 35, 40, 50% from these like other pools that have some like intricate mechanism, and you don't like ultimately some kind of like inflation or like some like Ponzi-nomics like behind it. In the case of like loans and organic NFT loans is like there's a borrower who's paying some interest and there's a lender who's getting that. So it's very straightforward. And it's not really like it doesn't really have the risk of that interest exploding, or you're not really having to like trust some like weird mechanism. So I think like the value prop there is really good. And again, like I started lending before Gandhi. I continue doing it in Gandhi and will continue doing so as long as this like opportunity exists. And on the borrowing side, again, there are people with like different risk profiles. People that like whether it's like trading meme coins, trading the like some like new meta, or call it like something else. And again, they can access pretty quickly capital that they will be able to manage for like again like these are like fixed term loans, so you know which APR you're going to be paying, you know for how long you're going to be basically having that capital available, and based on that, it's like pretty easy to structure a strategy around that. Versus like, oh, I don't know what APR I'm going to be paying. I don't know if I need to like pay back this loan because the floor tanked, and I'm going to get liquidated. So there are definitely advantages for both sides.
Exactly. Yeah, there's advantages. For anybody who's listening and this is interesting, obviously reach out to either Gandhi on their Twitter account, reach out to OXN. If you're one of my friends or a close family member or whoever who wants to play capital, obviously reach out to me. This is something that I truly think is kind of the future of Web3 digital assets. I think also is only going to become a more and more interesting way to deploy capital. Um, there's a lot in store for where you guys are going. I know you have a lot of bullets left in the chamber for what to announce and what's coming. So again, this should be on everybody's radar. You guys are crushing it. And again, thank you for the time today to jump on and explain what's happening on Gondi.
Yeah. Thank you, Hunter. I mean, always a pleasure. Appreciate the kind words and your time.
Of course. Thanks everybody for tuning in. We'll catch you on the next one next week. We have a lot of fun guests. But again, go check out Gondi, and thank you for tuning in. We'll catch you. Peace, guys.